Good Sunday, everyone. Welcome to your Sunday look ahead, the video that you guys get every Sunday to kind of give you an idea of what you can expect in disruptive technology in the coming week. And so this is the December 29th edition. And today, because a lot of you guys are in the process of taking the stock analysis crash course, we are going to talk a little bit about investing before we look into one or two of these charts. And so, if you've begun to watch your stock analysis course, you know that one of the most important things that you want to consider when looking for investments is whether or not a company has free cash flow. And of these 13 companies, only two of them have positive free cash flow. But how I kind of balance that out is if a company is brand new, like IPO'd in 2022 or 2023, like a lot of these have, I give them a pass on that for a lot of reasons. And I would imagine, if I remember correctly, that we probably discussed those reasons in detail in that course that you guys have access to in the free community. And if you don't have the course yet, I will show you how to find it before this video is over. But you guys, I'm going to skip all of this. You need to watch your course for that. I want to see who has increasing revenue over the last 5 to 10 years. And so Affirm, INTZ, that is pretty impressive. SLDP, and then I want to compare that to net income growth per share. And that allows me to see whether that increasing revenue is being spent judiciously and prudently, or whether they're being kind of frivolous and not efficient in their operations. And so, I would be curious to know what the reason is that they would have such high revenue growth per share and such highly negative net income growth per share. But I'm not going to touch that right now. Perhaps I'll look further into that later. Let's see. We got growing revenue here on a company that IPO'd in 2021. And again, the net income growth is misaligned, but perhaps the answer is easy to find. So they are spending a significant amount of their revenue on research and development. Not so much here. So we're going to let's focus on SLDP today. And I'm going to show you how to find a lot of this data on TradingView. If some of you guys use Thinkorswim, which I know is really popular, I would suggest that you try to find a video or find that data on the TOS profile. I would certainly not suggest that you pay for TradingView if you're already using TOS. But for those of you that do use TradingView, they have a pretty nice platform that I'm impressed with and I really love. Because it gives you a lot of data right here. And so you can get a quick look at the financials that you will learn about in that course right here. First, I will look at annual. And what I do see is that although it is not great growth, the revenue is growing year over year. The fact that their net income has declined so drastically in 2023 is a little bit troubling, but let's look at quarterly. Increasingly declining, I guess, net income. This is all frightening as an investment, but as a penny stock, there may still be some potential there. Okay. So here is where you would need to do some research into your incumbent president's policies on solar and EVs and things of that nature to see if, number one, the current administration has had policies that may have caused these declines over the last several years, and if the new administration will have friendlier policies toward these technologies. But let's see what is in the news that would have caused this incline over the last couple of days. Not financials. You can find all of the financial data here. And I have a paid account. I don't know how much they show you with the free account, but you can find all of your financial statements here. So that's great. But let's see what's in the news. Okay, maintained by Needham. That's pretty positive. So nothing recent. Okay, let's get back to the chart. While there is no news related explanation that I can see for this incline, the higher time frame, that's significant. So first thing I do is pick a higher time frame, find a move that I can draw a Fibonacci on from high to low or low to high. And that just gives me a trading range, an area to work within. And so once I've done that, just check my stochastic really quickly. I'm on a weekly time frame. Weekly time frame is very bullish. Very bullish stochastic. I have to look in this top left hand corner to see what the moving averages are doing. And the moving averages are still bearish on the weekly. Let's just peek really quickly at the daily chart and refresh that. Okay, you had a bullish cross on your daily moving averages, broke right through your 200 moving average and took out 4 or 5 Fibonacci levels. But now your stochastic is turning back bullish. It's overbought and it's turning back bearish. I'm sorry. And so we've been as high as $2.63, which is the 7-1 between the 7-1 and 7-9 Fibonacci area. And those are some significant retracement zones. You guys should remember that a Fibonacci is a retracement tool. And so it is a way of measuring retracements and using those retracements as a way to find trade opportunities. Okay, and so now we find ourselves back at the 0.5 level. The folks in my mentorship know that we don't want to buy significantly above the 0.5 level. And so us having traded right back into this level and started to find support is a good thing. So we're finding support at the 0.5. Our stochastic, though not oversold, is making a bullish turn. Let's see if we can find 456 divergence here. No divergence. Let's look at the hourly chart. Okay, everything about this says that it should continue up. And this is significant. We're on the 30-minute chart. We have support at the 0.5 fib level. And it looks like if the market had remained open for a couple more hours, we would have potentially taken out this next resistance. Because remember, for me, the Fibonacci is just another form, a simplified form of support and resistance. And so my price targets on a short-term trade would be 263, 281, $3. And so perhaps I will go and find you guys a $3 contract with a great date, great delta, and a reasonable implied volatility number. And if you don't understand what those things mean, you should definitely join the free community. But let me show you, because I'm going to wrap this video up here. I have to get ready for our mentorship training this evening. Let me show you where you can find the free investing course. I'm not sure if I told you or not, but we have some great events planned. And you can find your events right here in the left-hand menu at the top. Our community feed is a great place to look at everything that is going on. It pulls in data from all of the different areas and shows you everything that you have access to. But as far as the free course, you guys will all be added to when you join the free side of the community. You guys will all be added to the Quantum Collective. And what you want to look at is the discovery page. It is the top first featured post on the discovery page. And if you just open the training, you see that there are some instructions. It tells you where you can open a trading account. Gives you some instructions, tells you to take notes, gives you an idea of what you'll learn in the course. And then you have this document, which you can download, that is kind of the slides and the notes that accompany the training. And then here is the video. You can play it from here or you can open it in YouTube. So that is that. Is there anything else that I want to show you guys back here? There was something, but I can't remember. And so with that, guys, I'm going to end this video and put the finishing touches on the newsletter so that we can get that out to you by 6 o'clock. Have a good evening, and I will see you inside the free community.